told you there was a housing shortage. Is that a lie that just cracked wide open? The governor of Florida is calling the markets unsustainable. Builders are panicking, inventory is surging, and the Fed is quietly preparing for a bailout. For the past 10 years, we've been building rental housing that actually works in down markets just like now. Let's pull back the curtain and let's see what's really happening and what comes next. In July, Redfin reported 15.3% of home deals collapsed. This is the highest on record for that month. But let's look a little deeper. Markets like Jacksonville and San Antonio, they're actually seeing cancellation rates of 20 to 25%. So inventory in Florida and Texas is skyrocketing in certain subsections of the market. And even the Governor DeSantis of Florida, publicly admitted that the price growth since 2020, unsustainable. New home lots, land that hasn't even been built on, just crossed over the great financial crisis levels. Builders are sitting on empty dirt they prepped in 2021 and 2022, and now many buyers from those peak years are underwater. Closing costs alone mean that they're down $50,000 to $100,000 without even seeing a price cut yet. And these aren't just statistics. These are families trying to sell and being told they're worth $100,000, $200,000 less. These are agents dealing with sellers pulling listings after 2 weeks. These are renters watching new supply flood in and landlords slashing prices to compete. This is emotional chaos, and it's just starting. Builders now make up 26.8% of all active inventory nationwide. That is nearly double historic average levels of 15%. And what kind of homes are they holding? Mostly overpriced homes, starter homes of the emotional markets for 2022 demand that no longer exists. These units are sitting vacant or being dumped with massive incentives. Fed officials recently discussed the growing risk of a housing collapse. They're currently holding $2.4 trillion in mortgage-backed securities. If they resume buying to prop up the market, it will be a quiet bailout. And that would favor existing asset holders over first-time buyers. This creates the same dangerous cycle we saw a decade ago. Bail out the top, squeeze the bottom. Multifamily rents just posted their weakest third quarter since 2009. In Florida, we're seeing rental prices drop 10 to 20% in sub-markets. Why? Because when homes won't sell, they turn into rentals. And when everyone does that at once, it floods the rental market, and especially in that emotional level, 100% above median. It's pretty ugly right now. And if you're an investor and you're not watching this closely, you're going to get caught behind the lines. You'll still hear the pundits say we're in a 25-year housing bull run, but the luxury home sales, that emotional market, they just fell to a 10-year low in August. More listings are being withdrawn. Consumer sentiment is at great financial crisis levels by this point. The housing media has a vested interest in keeping optimism alive. You all have to understand that. But when the top 20% of buyers start pulling back, as they are now, it's a signal. The smart money is stepping out. So we've built through both booms and busts, and that's why we've never chased the hype. At Southern Impression Homes, we specialize in that build-to-rent community that serves America's largest demand segment that's often left behind: affordable housing, single-family homes, duplexes. These are the rentals that are needed, and our average product is built in growth metros with long-term employment drivers helping the market succeed. We focus on price-to-income ratios that work, not speculation. We build for cash flow that should be apparent right off the bat. We lease quickly. We avoid the luxury, let someone else deal with those emotional markets. And that's how we've stayed stable in the volatile markets. So for builders, reassess your pipeline. Kill product that no longer pencils. If you're stuck into a pipeline of these emotional properties, twice the price of the median in the area, and there's no buyers, you might want to take a step back. Also, focus on that smaller footprint and entry-level finishes. If that's what people are looking for in the more affordable range, then you want to answer the call and watch for opportunities in workforce housing tax credits. There's some interesting things happening that really could take a deal that doesn't make any sense to making a lot of sense. For investors, avoid markets with 20% or more cancellation rates. This is something you want to pay attention to, and target that B-grade inventory priced 20% below the 2022 comps. This is a very important thing that most people are not paying attention to. And negotiate hard with over-leveraged builders needing to exit. Get extra incentives, go for the price, see what you can do to get yourself the best deal. If you're an agent, educate your sellers early. Getting those expectations clear is absolutely pinnacle to make your life a lot easier. You got to reset the expectations because, again, if they're living in 2022, that's going to make your job a lot harder and no one's going to be happy. And use withdrawn listings as a hook for buyer clients. A lot of you know this, but if you're watching those, then you show people what's not selling. You can give them some proof of concept of what might sell. And build a reputation around truth, not hype. It's the truth that's going to get you the sales and the repeat business and the referrals, not hype. I've been investing in real estate since the late 90s, and I can tell you this is not 2008, but it is a correction, and it will last for years, not months. We believe that the next 24 to 36 months will reshape the entire housing ecosystem. Affordable housing, both owned and rented, is where the new floor will be set, and that's where we're positioned. That's where you want to be. Millions of homes will change hands in the next 5 to 10 years as the largest wealth-holding generation in U.S. history downsizes or passes on. This will drive a reshuffling of inventory at scale. It's another reason why building or buying at the right price point is critical, not emotional purchases based on 2021 expectations. Real estate doesn't crash overnight. It cracks, and it's cracking now. The builders that win will adjust. The buyers that win will wait for rational pricing. The investors, well, they're going to win with running with the numbers, not with the narratives. Do your numbers, work off of them. So if you're trying to figure out what to build, where to buy, or how to pivot your portfolio, message me. Southern Impression Homes is here to help. We have the data, the properties, and the team. We'll move you forward with clarity, not confusion. I'm Jim Sheils. Stay sharp, stay strategic. Talk to you soon.